Hello, and welcome to the July market update from Commonwealth Financial Network. My name is Brad McMillan. I'm Commonwealth's Chief Investment Officer. June was a busy month, particularly at the end. The so-called Brexit, the decision by Britain to leave the European Union, came as a total shock to markets. Almost no one had expected them actually to leave, and when they did, markets essentially collapsed. We saw significant declines around the world, worst in Europe, bad in Britain, not quite so bad, but still serious here in the US. But then something funny happened. Despite all the concerns and the fears about what might happen, what would have happened, what could happen, markets actually turned around. Markets started to move back up. We saw a substantial recovery from the worst of it. And why that happened is interesting. Because when they initially collapsed, they did so on fear. But then they started to be more rational. They looked and saw that, yes, everything has changed, but nothing has actually changed yet. And they started looking at the fundamentals against the possibles. They decided that actually things were not all that bad. And thus we end the month with some declines, with some damage, but not actually that bad, and not nearly as it might have been and as it could have been. And the reason why is interesting. Because when we start looking at the fundamentals, they're actually looking pretty good. Here in the US, for example, we've seen consumer confidence move back up much better than expected. We've seen consumer spending continue to improve. Business spending continues to be weak, but that's not news. And in fact, a lot of the headwinds that have been hitting the US economy are starting to abate. The dollar is weakening, which is a good thing for exports. And even though we did get a bit of a spike back during the Brexit move, nonetheless, we're still much better off than we were. Oil prices have moved back up enough to help the energy industry, but not enough to hurt consumers. So two significant headwinds are abating. Consumers are feeling confident in spending, and the US fundamentals actually look pretty good. Even abroad, we've seen European growth continue. British growth continues. We'll see some challenges from Brexit, but nonetheless, the strong fundamentals and the fact that politically, both Europe and Britain are taking a responsible approach suggests that the damage isn't going to be nearly as bad as it might have been. Emerging markets, in fact, actually moved up during the month, suggesting that whatever the crisis is, there are some upsides, and those are becoming more apparent as we move along. So what does this mean going forward? When we look at improving fundamentals, both here and abroad, we say that things are getting better. When we look at the headwinds abating, we see that things are indeed getting better. Does this mean we won't see more turbulence? Absolutely not. We will. There will be headlines, there will be concerns. We're in the initial recovery. We could see more turbulence, but nonetheless, we're well positioned to weather it. You can think of this as a stress test for the markets and for the economy. And the good news is we passed. Looking forward, that's actually a very positive sign, and we'll talk about it next month. Thank you for watching.